Welcome everyone. We're kind of on the downhill slide, but we're going to have a great conversation today, and we're chill, right? Like we're just going to dialogue. We'll have some Q&A at the end, which is a little unusual, but be thinking of what questions you have. We're going to talk about building inclusivity through wage access and faster payments. We're going to hit on several topics that are all required. But first we'll do intro. So Peter, we'll start with you.
Yeah, Peter Davey, lead up innovation at the Clearinghouse. Been there around 6 years, but been in the payments industry well over 25 and love this industry.
Hi everyone, I'm Cindy O'Neill, and I've been in the payment industry for 30 years, so I think I beat you on that. And I spent half of my career in banking and then went the Visa and then the fintech route. So today I am the president of BillGo and responsible for our consumer division that has bill pay and also building out our biller network.
Awesome. Divine.
Yeah, I'm Victor D. Lombard, professionally known as Divine. I'm the CEO and founder of Solvent. Solvent is a mobile-first, all-in-one banking and financial empowerment platform that focuses on the financially excluded.
Amazing. And I'm Tiffany Haynes. I'm the COO of FingerCheck. We do payroll, tax, compliance, all the headache stuff for small businesses, and we have a native earned wage access platform as well. So we're going to be talking about wage access, and we're also going to talk about payments, specifically real-time payments, instant payments, consumer experiences, which can be pretty convoluted in the world today, lots of definitions. So Peter and Cindy, I know you have a lot of experience in this space. Like, walk us through what's happening, what we need to think about, how things are being defined.
Yeah. So I'll take a quick start. I mean, I think when you look at payments, you have sort of the traditional payment rails. Everybody's familiar with ACH and wire and check. Hopefully we can start to continue to get rid of checks. And then you've got what we call sort of the new entrants on the payments rails, sort of RTP and FedNow that move things instantly. And I think there's some misnomers out there in terms of the difference between faster and real time. When we think about some of the faster payments experiences, whether it be same-day ACH, push to card, you're really talking about an opportunity where information may get there and then the settlement happens later. Whereas when you're talking about instant or real time, you're talking about the fact that the money and the information move at the same time, which makes all parties whole. It actually fills in a pretty big gap in the industry that's been missing for a long time as we develop things on modern technology platforms.
Mm-hmm. I look at it as PPS. So you have real-time payments, like what Zelle, Visa Direct, MasterCard Send do, which is messaging. You look at real-time posting, and this is where banks do memo posting. Funds haven't necessarily moved, and then you do real-time settlement. And this is real-time settlement I think is a key that where we still have a gap because of the legacy technology that exists with core processors and banks today.
Absolutely.
Yeah. Mm-hmm. So what about that consumer experience? Like, how do we need to be thinking about that? Because you define different things. So when you're building out product, like what do some of these developers and product folks need to be thinking about?
Well, we were talking about the fact that the the experience is really important, but as an industry, because the technology isn't up to date and everybody is approaching it very differently, it's not creating a great consumer experience. And so, as an example, if I am a consumer and I need to pay a utility bill because my electricity is going to get shut off, and my bank is enabled into a real-time payment network, and so I make a payment thinking it's going real time, but then the biller's banking or financial partner is not enabled in that real-time network, those two are not connected. So I may not get the benefit of my electricity being, not being turned off. And additionally, it's not just the payment, it's also the remittance systems of the billers have to be enabled to take and process those payments real time and recognize it back with the confirmation. Mm-hmm. So that's it's bad consumer experience.
Right.
Yeah, and I think we try to make up for that a lot in terms of creating those real-time experiences without that real-time settlement. And there's lots of things that can go wrong as you articulated in that particular process. I think from a developer community perspective, one of the things to look at is, I think most of you leverage a lot of push-to-card products. They're a lot more widely available today than, say, an RTP API from a financial institution or a FedNow API. And what I'd like to kind of state is that we're still in the first 4 minutes of a football game, and RTP's been on the field for 6 years, moving down the field. We're still 4 minutes in, and the FedNow is actually just walking through the tunnel trying to get onto the field. So when you think about it and you think about where we can go over the next 5 years, I think technology is going to start to evolve more rapidly. You're going to start to see more openness. But it's probably frustrating for you as developers because you don't have access to some of those tools today. So you're doing your best to create these real-time experiences, but as we'll get through in the panel, you have to actually think about the process end to end and where some of those strangleholds are so you don't end up actually making the customer experience very poor for the end user.
That's a really good thought. So a good key takeaway is just thinking about the consumer experience. What do you want it to be, and then kind of how do we back into that? So we'll have several takeaways as we talk, and we'll wrap it up at the end. But just kind of along those lines, so we've got the real-time payments. Let's shift it to like real-time payroll and kind of what we're seeing in the industry in terms of earned wage access. We have early wage access. We have a lot of words that do matter, but particularly around the wage access piece and making sure people who specifically are living paycheck to paycheck are working and then receiving as soon as possible. You know, that's a huge use case right now. So Divine, I know you play a lot in this space. You're very passionate about it. So you want to talk a little bit about what Solvent's doing and also kind of your purpose and your why behind this.
Yeah, absolutely. I'm somebody who comes from a background of poverty, right? So for me, being financially excluded all my life was really what drove me to really build Solvent. That's what led to me think about how could I build something that really empowers this demographic that I come from that nobody else is really, is even concerned with, even trying to help. And that's what led me to build Solvent. When we think about the over 40 million Americans who are low to moderate income Americans, and they live paycheck to paycheck, it's very important for them to have access to their money, right? Their wages, because any type of financial hardship that falls upon them, it is basically no financial stability for them. So they really have to think about how we can build things not only fast, but really innovative and in a different way that allows us to make these wages available and these payments faster.
Mm-hmm. Yeah, and I think the industry is really pushing that. Unfortunately, it's not regulated yet, right? So we have a lot of states coming out with different rules and thoughts and guidance around what is earned wage access, how is it defined, is it a small loan? So as you're building out that tech, like we have to have a lot of flexibility in how we think about it, how we build it out to account for so much change happening. So that's a really great story of just like empathy and thought. And I think it really ties into kind of what we're going to walk through next, which is, when we're building out tech, there's this ecosystem of all these different players, all these different constituents that we have to think about and we have to consider. And like at that forefront is really the human layer, like the stories and not just the dry use case or the specs that we're used to, seeing cross our email, but really making sure that we understand those players as people. So each of you have like some great perspectives around like merchants, small business owners, employees. Like let's talk a little bit about like the capacity of that human layer and what we need to think about going forward.
Yeah, so at BillGo, we everything that we do, we put our consumer first because we have to think in that mindset from a human layer perspective. But just if you think about it in the form of bill pay and in faster payments, there's a lot of confusion, I think even with people in the financial services space on what is a real-time payment. So a lot of people think that a credit card payment is a real-time payment. And now that you're introducing virtual card payments through bill pay networks, is a virtual card payment really a real-time payment? But so from a consumer's perspective, I've gone into my bill pay platform, I've scheduled a payment, it's been debited from my account. And through the use of technology, you can have a provider that's either spinning up a virtual card to deliver it to the merchant. But what happens if that merchant doesn't process that virtual card, or they may not be enabled to take that card payment? So is that a real-time payment? It's actually not a real-time payment. And then what happens from the experience, if that goes unprocessed, then we're recrediting the consumer's account. So now a consumer thinks, I've just made a real-time payment, it's been debited from my account, but I just got credited for it, was my payment made? So it's just a really bad experience for the consumer and how and so this is what we have to solve for from a technology perspective.
And I think to Cindy's point and the point that Ben raised earlier, we've got super fast cars on a dirt road. I think that's a great analogy because that dirt road is basically the final mile to those posting systems, whether it be the bank's core platform in which the payment's posting so the customer can actually see what's happening to their account, or it be the merchant account, or it be the biller's account that you're doing it. And in order for instant wage access and earned wage access to really work, you need to be able to work on both sides. You need to be able to receive the money in real time and spend the money in real time. So as I'm leaving my job at Wendy's and they're giving me my real-time payroll as I'm walking out the door at 11 o'clock at night and my bill at Verizon is due at 11:59:59, I need the ability to be able to apply that in real time to be able to fully get use and access out of that. That's the democratization side that we need to all work for. But I think as been articulated, there's still a long way for us to go to get those back-end platforms ready to allow for that to happen.
Yeah. What about the employees when we talk about like wage access and things? You talk about spending in real time, but what are some things around the employees that we need to be empathetic about and think about?
I mean, again, when we think about these individuals who are low to moderate income Americans, not having access to their money when they need it, they have something come up where it's a financial hardship again, and they don't have the access. These are individuals that are very, very, they're not financially resilient, right? So anything that may happen, COVID is a perfect example. People just lose their entire lives, right? So that human aspect is very, very important, especially when you think about developers. When they think about, okay, you're a developer, you're a programmer, you got tech specs, but really think about the human that you're affecting, the end user, the human that you're affecting with how you develop your product, right? You may be somebody that's making over $100,000 a year. These individuals wouldn't even dream to possibly see that in their lifetime. So how can you really be empathetic and really look at their perspective of who you're building for and how, in the way that it affects those individuals? So really having that that insight, right? So that you're really affecting society and humans that really need this.
Right. Yeah, that's so good. All right, so kind of looking at that payments and banking layer, we've chatted, we've hit on it, right? It's antiquated, it's a dirt track. What else do we need to be thinking about in terms of like tools and how we build things out in relation to that specific space?
Yeah, so I would say from a developer's perspective, we need to get away from batch as much as possible. Start looking at, different, APIs or just real-time, processing, because that is what's really hurting us. The last big banking upgrade was in the early 1980s. We're still processing on ACH on PEP Plus, which is a batch environment. Same day ACH was really just processing your batches more frequently throughout the day. Right, and so this is where we have to get away from that, and everything we do look at real-time processing.
Yeah, I would say the other thing I'd add on to that, so 100%, a financial institution moving toward 100% real-time processing, sort of stream processing instead of batch processing, even if you batch it up in the back, that's fine. But fixing that front-end layer is important, but I think even more so, it's about making the tools available to the people that need them. And most small businesses in this country are much like folks who are on lower income are underrepresented in terms of the technology that they have access to. For years, small businesses can't do ACH, and especially ACH debits, because the risk is too high. You don't know that business well enough to be able to underwrite them from a credit perspective. I think as we move into the world of real time and get that adopted, whether it be FedNow or RTP, things like request for payment are going to be hugely important, because now we can give small businesses a tool in which they can interact with customers, whether it be other businesses or other consumers, to be able to ask for money in real time, which is a soft ask for something that doesn't have to be credit underwritten. I think that allows us to put more tools in the hands of customers, and it's up to all of the folks in this room to embrace those capabilities and start to get those tools out in the hands of the people that need them the most.
That's good. Anything you want to add, Divine?
I mean, yeah, again, it just goes back to that human experience. We all need some type of, support. We all need some type of financial stability just to exist as humans on this planet. And the more if you look at everybody within the chain of this development, for example, every neobank has to have a sponsor bank, right? Has to be a partnership. I think when you look at that type of partnership, choose a partner that really has that empathy, that really cares about the solution that you're building in a real way, not just a dollar. We know it's a business, we have to make money, but also how you see that social impact and the way that you can have that if you become involved at some degree, right?
Right.
And I think that's very important, again, for these institutions to really have that empathy themselves, beyond just developers, beyond just those CEOs and founders that are mission driven and want to solve this.
That's good. So the fraud and risk layer, let's talk about that. We want to remove friction. Like, we're talking about a lot of experiences that consumers are having and employees are having that are filled with friction, right? I want to make this payment. They're going to shut off my electricity, real life things. But we have to we can't ignore this fraud and this risk layer that are kind of baked into our ecosystem here. So what are some things these folks need to be thinking about, processing, the different risk models we should be looking at or considering?
Right. Well, so, thinking about checks, like, I know, like, a lot of people would write a check. Even, the reason people like to write checks sometimes is because they don't have the funds available. So you go and you drop a check off, and then you have a couple days maybe to put the money in because of the posting process. And so I think that is, people get comfortable with that. And, like, even with the risk layer today, just thinking about making an electronic transaction, it's really the settlement and the funds availability that is really key, because you're not going to be able, once you get to real-time settlement, there's no float. The money's going to move. But I think that, there's a definite, banks are going to have to look at liquidity very differently on how they do risk profiling with their customers, their merchants, the small businesses. Because today you're going to you're almost extending credit. If you look at the merchant acquiring community, a lot of, their merchant acquirers, they're going to hold the money until that they know that the money has settled, the money has moved. A lot of small businesses that you'll see a lot of reviews about merchant acquirers that they get upset because they don't receive their funds, but they don't receive their funds because they're not available yet to deliver. So I think that whole risk model is going to have to be evaluated as everybody's starting to play in this ecosystem.
Yeah, and these are entrenched positions, right? So I think the merchant model is a really important model to understand. You have the merchant services, the acquirer side of it, then you have the issuing credit card side of it, and all of that gets funded in arrears, even though information moves in real time. To your point, we're seeing some pretty good gains now with some merchant acquirers starting to front money, very similar to the way that we're doing things within the earned wage access space for consumers. And that's helping small businesses, but not all merchant acquirers do that today. But to your point, there's still a risk equation there. You can't give them all the money because not all the money has settled, and you don't know whether all the transactions are going to be there at the end of the day. And I think that really is incumbent upon us to say, all right, well, is card always the right way to leverage in order to process transactions? Can we open up other models that allow for more real-time money movement? Debit card's been entrenched for years, but debit card and credit card have the same problem of not being able to get to the people that it needs to in the time frame necessary to be able to do things like earned wage access at the end of the day,
right?
Especially for the smallest of the businesses.
Do you think good funds model will become more prevalent?
I'm hoping that people will leverage some of these new tools to build better processes, and then you don't have to worry about the risk as much.
Yeah, that's good. Anything else on these constituents we want to talk about? It's good. Okay, so definitely empathy is key here. We talked about just removing the friction, but also balancing that with the fraud piece, because we are dealing with models, as you said, they're deeply entrenched, they're tough to change. Even if we want to change it, we want the experience to be different. So this is, a discussion about a really hard problem, right? And as we've talked about, it takes different sides of things. Even if you can get the money in real time, can you spend it in real time? And so it's learning to balance that and right through that. So we gathered just some takeaways for you all to think about, as you're kind of processing through the conversation and, like I said, just solving these hard problems. But we are going to open it up for questions. We have some amazing folks here on the panel who have just a very deep experience in the industry. So we'll pass the mic around. So this is the don't be shy. Try to bring out your inner extrovert in this moment.
So I do want to raise, while we're waiting for the microphone to pass around, a point that I think is important to look at, especially as developers in this room kind of sit here and go, wow, things move at a glacial pace within the payment system world, and that's not wrong. When you look at sort of ACH processing, for example, which we all take for granted now, ACH took around 25 years to get all financial institutions adopted on it. That's a long time to wait to allow for something that was supposed to help modernize our core infrastructure to do that. Now, ACH has been in existence for 40 years. The interesting thing about that, not everybody sends ACH payments today either. So they receive a lot of them, but they don't necessarily send them out. Not every financial institution provides that service to their customers. So I think as you're thinking about some of these new technologies that are coming into play, including things like FedNow and RTP, it's going to take some time for adoption. It's not going to take 25 years. I'll tell you that right now, and the reason why is because everybody's on the path for modernization. But it really is about building out and working with financial institution partners that allow you to embed these capabilities. So as you're looking for partner financial institutions out there, look for folks that allow you to actually work with them to build those things into your tools, because those are the ones that you're going to actually be able to get the tools into customers' hands and make both you and the financial institution more successful.
That's good advice. Okay, questions from the audience. It's your turn. There's one over here to the left row. There we go.
All right, I guess I'll go first. Okay, so if 80% of transactions that happen are consumer to merchant transactions, and most of those transactions are below, say, $20, how do we find those use cases? You guys have any crystal balls about which one's going to drive adoption of real-time payments at that merchant level? What would be some ideas for, high volume transactions that would really be, something that could drive a real-time FedNow kind of scenario that would help people? We've talked about wage here. We've talked about, one-time monthly payments for utilities, but we need to find those use cases that are high volume, and just wondering if you guys have any ideas, I guess is my question.
Yeah, I'll kind of start with just a thought on that. If you think about what a debit card is, for example, so let's leave credit card out of the equation because people use credit cards for very important reasons and different reasons than what they use a debit card for. The debit card is an access device to an account, like a check is, right? So the problem that we've had with ACH payments being able to be used at the point of sale, and even with RTP and FedNow, really comes down to the fact that there is no access device normally for those types of payments to happen instantaneously at the merchant. But there is a world in which you could leverage things like request for payment to handle those in a real-time manner. I think we'll start to see some adoption and the e-com side on that. I also think that there are some networks out there that are thinking differentially about this. Think about like utilizing a QR code via Zelle at the point of sale to be able to move a real-time transaction in that space. The tools are available. I think much like anything else, it's about trying to get the merchants to adopt those capabilities. And the question is going to be, what is the economic value for a merchant acquirer to actually offer that to their customer? And I think that's going to be the fight, the long tail fight that has to happen before this becomes more prevalent.
And I also think that look, people going back to my check analogy, you write a check because it's not going to clear for a couple of days, so you buy some time. People are going to try to gain the system. And even today, when you're in a bill pay environment, depending on how the bank supports it, they're going to move the money out of your account into good funds before they send it. And so when you get to real-time settlement, that's going to change a lot. So I think that is going to drive the behavior on how you are making payments or what payments you make that way. So.
Great question.
Well, I just wanted to follow up, if I could, a little bit. I think it would be useful to study the experience in India, where they've gone way down to, in terms of the average size of the transaction on the UPI, to a degree that the UPI Lite architecture is now so difficult for the servers to handle that they're trying to find ways to put it, anyway, architecturally, they're trying to find ways to put it off into the edge. The transaction volumes are in the billions and billions per day. It's amazing. So what they're really replacing is cash. And all of the many transactions that people today use cash for, that's what can go on FedNow. And so, yeah, it's going to take a while. I don't think it's going to take 20 years. I think it's going to be much more rapid. But what are the first use cases? Is it, anyway, this is a longer conversation, but I appreciate your comments. Thank you.
Yeah. Another question.
Wait.
Oh, wait.
So something that all three of you touched on, whether it's the 40 million Americans, it's the small businesses, or Peter, your comments about settlement. I was wondering, so we have this new technology, we have this new capabilities, but in typical fashion, the biggest of the bigs are going to use it and get access to it and adoption to it. And that really just comes down to a risk profile, right? It's not about the technology, it's whether or not you get access to the technology. And I guess the question there, Peter, you said something that had my head buzzing, which was, well, real-time settlement actually helps with the risk profile, which means what Cindy said on the small businesses, there's less risk, and what Divine said, there's 40 million Americans. Maybe just talking about getting the right people into access, I'm curious where you were going with that.
Yeah, so I think when I look at the problem, one of the terms I hate is the term ubiquity. And the reason I hate the term ubiquity is because ubiquity means that everybody has access to it in order for it to happen, right? Even ACH, in my opinion, is not ubiquitous because not everybody has the ability to affect an ACH transaction. So we like to talk about it from a network point of view, that it's ubiquitous because it reaches every bank, but not every bank offers those services to their customers. So there's a couple of things that I think come into the mix. I think the first is we have now new modern infrastructure that's programmable. So I look at RTP and FedNow the same as I look at a CBDC. It's a programmable infrastructure. In order for it to be programmable, though, you actually have to put the access into the hands of the people that are developing the tools for the customer. And that's where I think partnerships with fintechs and cores, fintechs and financial institutions of all sizes need to come together to be able to create that more open access. We're used to, as an industry, walled gardens because we think it causes risk to actually open up those walled gardens to others. But with technology and with making it programmable and understanding and leveraging the data, I think there's lots of ways in which we can reduce risk with a much more open architecture. So what I'm hoping is that folks like you in this room will take that to heed and say, yes, let's try to go and work with financial institutions and others that allow for more open access. And it may not be the JP Morgan Chases of the world or the Bank of the Americas of the world. It might be a Cross River. It might be, a First Bank of Oklahoma. You have to find the bank that's going to actually help you to get access to those capabilities and seize the vision of a much more open architecture.
But in order for that to happen, everybody has to play ball, right? And not everyone is today.
That's true. That's very true.
Hi. So to the last point you just made, so all the banks don't play the same games. So think about me creating a fintech app that helps people pay their bills every day. I have some customers in Wells Fargo, some on Capital One. How do I get to run the RTP rails on Capital One and Wells Fargo? Because they play differently. So if I'm actually trying to solve that problem, it sounds like there's going to be lots of bureaucracy going on upfront. So shouldn't that be built into the rails itself, like RTP, where I can actually act on behalf of customers to actually push funds?
It's an interesting question. I think the first part of your question is, do all people play in the same realm together? And I think this person over here raised the same issue, which is in UPI, you actually have a mandate from the government that says, thou shalt do this, and thou shalt open up the access to be able to do transactions on it. I don't know that we'll ever see a mandate in the US. We can probably debate that. But I do think that the networks, if they want to achieve the true value of what they've put out there, should start to make mandates to financial institutions and core providers to implement the full stack of capabilities, because we don't get to a programmable infrastructure if we don't implement all the capabilities. So I do think, based on conversations that I've had with financial institutions, there is some openness to having the networks mandate a little bit more. Visa, MasterCard do this very well today. In fact, Visa, MasterCard push out a whole lot of stuff that people don't want to adopt, but they say you have to adopt it, and therefore that's how you actually get lots of transactions moving over a network. So I do think the networks have to be more bold and understand that it might take some time, but it's worthwhile to be a little bit more bullish so that people have access to all the tools that they need.
Mm-hmm. You know, we were talking before we came up on stage about the difference between the clearinghouse's RTP and then FedNow. And I think there's a lot of confusion out there with the industry on, well, should I adopt FedNow or should I adopt real-time payments? Do I have to do both as a fintech provider? And some people are even trying to categorize that RTP will be the larger banks. You might have mid-tier, tier 2 and above banks have both FedNow and RTP, and the lower, credit unions, community banks, smaller banks have FedNow. So I'm going to ask you a question. Like you actually answered this, a little bit differently, because you thought that everybody at some point is going to have access to both.
Yeah, so I think there's been a lot of talk about like this term interoperability and how these networks will actually work together. I don't think the right answer is for the two networks to sit in a room and figure out how to actually technically interoperate. I think the right answer is for the two networks to sit in a room and figure out how they make sure that the rules aren't different so that they can technically interoperate through other providers. We know that all the core providers, including Jack Henry, FIS, Fiserv, and a whole host of other ones, have built out connections to both rails. And their software that they're using in front of it would allow the smart routing onto either rail. So I think you already have some technical interoperability that exists there. So I think the point that you were raising, which was a very important point, as financial institutions are looking to go live on real-time infrastructure, I think you're going to see the cores push both. Because one, they want to make money, right? So they're going to want people to have access to both so that transactions can actually traverse both. They're not going to be choosing one over another. But I do think there's some financial institutions who might need a little bit of urging to be able to say, yeah, you should also do both as well. But I do think you're going to end up with a twofer because the technology's already been built to be able to support it.
Yep.
Hey, question for Divine. Are there any organizations that you would like to shout out that are really leaning into financial inclusion and solving that problem and not just paying lip service, but really getting their hands dirty?
Oh yeah, definitely. I mean, when we talk about like financial inclusion and we talk about these banks that are players and you have to partner with the bank when you're a neobank, it's really important that you really get them on board and really choose somebody that really has the desire to want to empower them, right? Banks are they want to de-risk everything, right? And the population that Solvent serves are really high risk, is a high risk population. It's the lower end of the low to moderate income American. So with that being said, these are individuals, of course, socioeconomically disadvantaged or formerly incarcerated. It's the family, friends, and loved ones of the formerly incarcerated, endo-incarcerated, innocently incarcerated. So that's who we really are focused on serving. I'd like to definitely shout out Hope for Prisoners. It's definitely an organization that we're working with and partnering with to really bring our technology to and allow them to become empowered financially when they come home, when they're really building their financial life or rebuilding it. Also, we just partnered with the company Grit Financial that allows access, next day access to funds for individuals, up to 50% of that once they earn them wages. So those are the two companies I'd like to shout out while I'm here. Thank you.
Other questions?
Hi. Hi, is this on? Yeah. So a bit of a story and then a very, very open question. So last night, walking back from 7 Grand, came across this guy and he's in the parking lot. He's washing windshields, right? Trying to make some extra money. And we start talking and hear his story and you know, I don't carry cash. I don't even carry a debit card with a PIN to go to an ATM, right? And I'm thinking, I talked to him about this, and he says, man, everyone walking by here is saying the same thing, and I'm thinking, yeah, everyone walking by here is probably a fintech engineer, and we're trying to make it so you don't need to use cash, right? I'll bet you are hearing that a lot tonight, and but it got me thinking, and as we're talking about inclusivity, right? How do we? It feels like as we're using technology to solve these problems that we could be increasing the gap, right? Because there are the people who will be carrying cash and the people who can only take cash, right? Is there a way to solve that? Any thoughts?
Wow, it's a big question.
That's a hard one.
Yeah.
So I want to make one observation, which is the reason I got involved in helping to build a new real-time payments rail in the U.S. is because I actually felt that at scale, when we all have real-time payments and we all have real-time electronic money movement, it actually drives more inclusivity because everybody can have access to the tools. The barrier to entry is much lower, and it's a much lower cost of ownership. So I do believe that things like RTP and FedNow are moving in the right direction, but I also think that as an industry, sometimes we look at it the wrong way. I'd rather look at the way you do, which is how can we solve the problem of making it inclusive for everybody to be able to use money in the US in an electronic form. There's a lot of downstream effects we have to fix on that, but I do believe that through the adoption of these types of instant payment systems, and we saw it in India, we've seen it in other countries, it actually creates a much more inclusive capability to be able to do it. But we have to, again, go back to what I said earlier, which is you have to put the tools in a user's hand to be able to leverage them, to be able to make it work for everybody. But I think we can bring down the cost of transaction processing. I think we can bring down the cost of banking. I think we can improve the liquidity situation for millions of businesses that are out there. And that's the hope and why I got involved in building this thing in the first place.
Divine. We all need to carry some cash.
Well, you look at the demographic we serve, they come from a cash economy, right? Mm-hmm. And what's amazing about that is that these individuals in these communities are the largest users of smartphones, right?
Okay.
Which is a contrast if you think about it, right? So they do have the access to the technology they need, right? Mm-hmm. But when we think about what we're doing with Solvent, it's more on the financial education side, right? How do we add that component to really get people to understand how cash works, how financial technology works, how to leverage it in their lives to become financially empowered? Because that's really what we focus on, the financial empowerment piece. So with the EdTech piece incorporated into our product as a component, we really lean heavy on financial literacy and beyond that, entrepreneurship education. I look at my own life, somebody who comes from poverty, somebody who was financially illiterate, right? Didn't have access to money. I went to prison for 10 years, right? I got out. I was focused on changing my life. I got into Silicon Valley, one of the highest levels of venture capital. And then I said, you know what? I need to solve this for this community I come from. And that was my first involvement in financial technology. I chose the hardest sector of technology that's so regulated. And it's been a deep learning curve for me over the last 9 years, from going to my first fintech startup to now building Solvent. But all those learnings is what I'm taking back to these communities to show them that they too can do it as well. And I think financial technology and financial empowerment are going to be the things that drive them to success and change their lives.
Yeah, that's so inspiring.
That's such a, yeah, that is very inspiring. That's such a good point, and it's also education too. So in the point about the cash, so just thinking through this, like, so I have a rental property and I'm a housekeeper and she doesn't have a checking account.
Right.
And so I'm literally, like, I was in my office a couple weeks ago in Colorado and needed to pay her in Oregon, and I'm literally bringing out a checkbook and I'm writing a check, and I hear our TPM on the hallway having a conversation with somebody, and they say, I've never even had a checkbook. I don't even know what one looks like. So I walked out and I'm like, this is what one looks like. Check got lost in the mail. So, you know, and then the point is the housekeeper, she says, I don't have an account. I don't want to have an account, can't get an account. But if she's got a phone, to your point, but you don't have to have an account. You can set up a wallet, and then I could transfer money through a wallet. You don't have, you know, so that, and to me, it's that the education.
Right.
You may not be able to get an account at a bank. You may not want an account, but you could get a wallet through an app. So I think there's just different levels of education that we should be providing.
Yeah, if you look at the stats, for example, like Cash App has one of the largest population of immigrants. And the reason why is that those folks who come to this country, and a lot of the folks you talked to last night are actually immigrants from various different countries, some in Somalia, some in others, right? They can't get access to traditional financial tools in the US. We make it really hard. In fact, I know there's somebody here that's from Australia. One of the hardest things is you can have really good credit in Australia. You come over to the US and it's like you're a 15-year-old that's getting a first banking account. Like, we treat people so poorly here when it comes to credit and facilities and even financial institution accounts that we need to fix that problem as well. So there's a whole larger problem that we have to fix. But I do think that through democratizing payments, we can hopefully lower the barrier to fix some of those problems versus what we have in place today.
That's great. Anything else on your mind? Oh, one in the back. Oh, one in the front too.
Yeah, I've got a question, I guess, going back to I guess in the previous pre-note, we heard that, faster payments is faster fraud. So I just wanted to get I guess, a sense from you guys. How do you think, what are the ways to address that? How do you think the networks, the banks should be doing to address that? And is anything from other countries' experiences with faster payments that might be informative?
So first of all, I'm going to disagree with Ben that faster payments equals faster fraud or instant payments equals faster fraud. No offense, Ben, but the reality is we're actually seeing lower fraud rates, less than a basis point for the entire transactions on the network, and other countries are also seeing the same thing. But Cindy said something that's really important for financial institutions to understand, which is you have to unbatch your transactions in order to actually fight fraud. If you want to be able to fight real-time fraud, you want to be able to fight scams, you want to be able to fight account takeovers, you have to look at all transaction volume in real time, regardless of the channel or modality that it's moving down. And I think that's the hardest piece for us as an industry to get through. So I think it's one, unbatching the transaction, two, putting in modern day screening that screens the outbound transaction that's moving in there. And I think the third is we as consortiums need to share more data on fraud so that we can fight fraud as an industry. I think if we do those three things, we actually make the entire infrastructure a lot better.
Yeah, I disagree with that comment as well. And most of the fraud that we see is friendly fraud. Family fraud, your kid takes your credit card and uses it to, go buy something. So I don't see an increase in fraud with real-time payments.
Hi, so fraud tends to impact, marginalized communities disproportionately, and the current strategy seems to be, well, financial education will help, but that doesn't really scale. I'm wondering if there's a way we can change sort of basically change the ecosystem to make fraud against these communities harder systematically.
Good question.
Yeah.
We're open to ideas.
So are you saying that in certain demographics or regions that there's a higher level of fraud, and do you create solutions that address it differently? Is that what you're, just to make sure I understood?
Well, more that like if I lose $500, it sucks, but I'm okay. But if someone, who's in a marginalized community loses $500, that's catastrophic.
Right.
And as well, like education is, I have time for it and other communities don't. So is there a way that we can just make it harder so that it's less burden on these people already, so that they're just less likely to be a victim of fraud?
Yeah, in the modern day of technology, we've gotten to a point with the various different social scams that it's really, really hard for people to determine, especially people who don't understand technology all that well, whether or not the other party is truly a scammer or if they're truly a good person, right? And I think those issues are issues that need to be solved on a community level. I think a lot of what Divine's doing and the work at Solvent and educating people is helping some. But we've even seen really smart people over like things like Zelle. You can tell them 15 times not to send the money, and they'll still send the money. Mm-hmm. And that's tough because you're fighting against potentially somebody's intuition that they're trying to be a good person, but the person on the other side is a scammer, and you just can't tell them that because the story is so rich and so deep. So we're going to have to, as an industry, and I think through technology, start to look for those patterns and try to alert the customer earlier on that, like, hey, you're getting taken advantage of. I do think folks like Facebook, I think Twitter, or X, I think all of those networks have some culpability too. They should be doing a better job of outsorting the fakers. They should be understanding when people report that money's been stolen, and they should disable those accounts and then look for trends in those accounts. I don't think those folks are doing enough either, quite honestly, because that's where a lot of the scams start. So I think it is across multiple industries that we have to be able to address that problem. And I think the last piece is maybe just telling your customer no sometimes. So I think as financial institutions, we're afraid to tell our customer no. It's their money. They should be able to do what they want. But no good things happen after 2 a.m. in the morning. If your customer is trying to send $500 after 2 a.m. in the morning, you might want to say, hey, we're going to call you in the morning to see if you still want to do this transaction. So help a customer through helping themselves.
Right.
Yeah. Building that awareness. Yeah. Anything else? Yep.
Hey guys, I just have a quick question. I'm a huge proponent of education. I love that you said that. But there are some coteries of people who are just averse to technology, such as, elders. How do we overcome that? What are some strategies that you have to help people, access it and be more comfortable with it?
I don't know. My mom is 80 years old, and she's more tech savvy than I am. I'm not kidding you, because that's what she spends her time doing. So, I don't know. Through outreach through, through seniors, like she literally will volunteer her time to go to, Elks Lodge and Lions Club and senior events to help educate other seniors on how to use technology. So, maybe that is something that is, interesting from an educational perspective. Because we do, look at all the media out there. It's targeting the millennials, right? And certain demographics. But I think that's a really great point. There's not enough education out there. Yeah.
Anything else on your mind? Okay, well, this was amazing. Please show your appreciation to the panel today because they were awesome. Very nice. All right. Thank you.
Thank you.